Everyone, hope everything is going well. I wanted to discuss a powerful recession indicator. And this individual talked about it the other day. He runs Eurodollar University. I think his name is Jeff Snyder. He does a really good job. And he looks at what the Federal Reserve likes looking at, especially Powell. And the near-term forward spread is the difference between the expected 3-month interest rate 18 months from now minus the current 3-month yield. What's really neat about this is there are individuals you could see right here, Anthony and Daniel, they created this website and they calculate this data every Wednesday when the Fed board releases the previous week's yield curve estimates. Okay? So all they do, if you go to a spreadsheet, they look at the date, they look at the forward curve, and they look at the current yield, okay, the 3-month yield. The thing about the future is if the yield is negative, why is the interest rate negative? That's a problem. Okay? That's a huge, huge, huge problem. All right? Let's look at currently today or from the past week. So it's saying the forward rate is 4.16 18 months from now. And ultimately, the yield as of 10 days ago, is 5.24. So just to make sure that the data I got is adding up correctly. 1.7. Okay. It's a little off. That's weird. It's approximated, but regardless, it's around that range, okay? And it is negative. And here's the deal. If you're looking at this graph here, look at the times where we had a recession. 2000. How many months approximately was this a negative, the negative term forward spread? Okay. It's what? Basically, you're looking at August. If you look at it closely, August 2020 to, let's go here, to about March, April-ish. Yeah, it's about March or April. So we're not even talking about 12 months. This was a huge dot-com bubble. Looking at over here, you're looking at what was it, September, August? I mean, looking at basically end of August all the way to where the curve started to revert back to the upside. And the recession actually was, from my memory, in December of 2007. So you're looking at what, August? And it wasn't that steep, the inversion. But anyways, you're looking from August, and that was the great financial crash, by the way, everyone. You're looking from August all the way to December. So you're talking about 16 months in about. If you look at what happened in 2000 with the pandemic, you saw it in what, March of 2019, about April 2019, March 2019, and then bada bing, bada boom. It took about a year. So 12 months, the duration of the inversion. What about this thing here? I looked at on the spreadsheet. It was basically January or February and where we're at right now. This is much more steeper than 2000, the inversion. 2007, COVID, pandemic. You did see a huge inversion in the 1980s, but at that time, the US economy was strong in the sense that America wasn't in too much debt and they could handle higher interest rates. Right now, we can't. We are a nation of consumers. This is a huge, huge red flag. All right. This is 12 months in. This is going to be a nasty bubble. If history lines up any similarity, this is going to be much worse than 2008. Okay. That's just my opinion. Hopefully I'm wrong, but this is not 1980s. This is much different. Okay. Yeah. In the 1970s, you had nasty recessions, but guess what? America at that time was much stronger, even with the stagflation, if you think about it. Okay. This is not the 1970s. This is America on the way downhill. And we have commercial real estate. That's probably going to be the first shoe to drop. That's why I'm not too confident in the economy thus far. Yeah, the stock market is going up. Yeah, my portfolio is up. But just because it's up right now doesn't mean it's going to be up at the end of the year. So it is what it is. This is a huge red flag for the economy. But, retail is going to be buying stocks. That's what I think. And big money is selling. They're dumping. And then the retail is pumping right now. But the retail is going to get hosed, in my opinion. They're buying at the wrong time. Anyways, I'll talk to you later.